initial public offering. It's also called IPO, a quick way to make some good money. Hi guys, my name is Karan. Welcome to your channel. And in today's video, we will talk about IPO, initial public offering. Okay guys, so let's get started. Number one, what is an IPO? As I have just said, IPO is called initial public offering. It is a way by which company dilutes its shareholding. It requests people and other institutional investors to invest in the company. They get equity shares in return of some money. Okay, for example, you must have seen this company is XYZ company is about to launch an IPO, and their shares would be available for, let's say, 500 rupees for one piece. So you, me, all of us can apply for those shares, and they have a draw. So basis that we will be issued, these shares will automatically land in our demat accounts. So IPO is basically a method by which the company is able to make money by diluting its ownership rights, if I have to put it that way. If I am a company, I have, let's say, 1 lakh equity shares. I'm a private company listed under the Companies Act, right? So I want to make some money. So what options do I have? What options do I have? If you own a business, you want to expand your business or pay your loans, what option do you have? One option is that you go to the bank, take a loan. It is quite costly. Other option is that you issue debentures, very costly. Other option is that you issue company fixed deposits, again very costly. Next option is you make people your business partners, business owners. So if I say IPO is a way, for a common man, it is a way of owning a company. If I have, let's say, 20 shares of ICICI Bank, so I own some small part of the company. I become the owner. So by IPO, company is distributing the ownership of the organization with lakhs of investors. So there could be retail investors like you and me. There could be institutional investors, mutual funds, foreign investors. Okay, so IPO is a method by which the company dilutes its equity shares with among the public, and once they have the money, they can use the money for a lot of things, maybe expansion, maybe for paying the debts, maybe for doing research. It could be anything. So if I'm convinced why they are taking the money from me and they will make profits, of course I will be tempted to go for the IPO because I know the company is good, right? Okay, so we have discussed what is an IPO, why a company goes for the IPO. Now let's see how I can make money from an IPO, guys. So first, understand every IPO will not make you money. And how I will make money? For example, I apply for a share, an equity share of a company for 500 rupees for one piece. These stocks, they will get listed on Bombay Stock Exchange or National Stock Exchange in India on a particular day. And when the trading will start, buying and selling will start, they will open at a particular price. Let's say a 500 rupee share, when it got listed, the listing price came out to be 600, right? 20% hike, 20% in one day. So if I'm an investor, I can sell my shares the same day, make 20%. But it is a possibility that the stock will get listed at a lesser price because of demand and supply. Let's say it got listed at 400. So straight away you made a loss of 20%. So how will you make money with IPOs? First of all, guys, every IPO will not make you money. Making money from IPO is a very short-term thinking. It is like making a quick buck. Okay, so you have to first understand what are the company's fundamentals. The only company which will make money for you is the one which is making profits. If you look at the graph of the chart, the graph of their profit, the share price always follows the graph of the profit. It means if the company make profit, the equity share of that company becomes more valuable and it will grow, right? So when you are applying for an IPO, so these days it is very easy. So once you are applying for the IPO, the day of the listing, you will get to know. Before applying for the IPO, you have to do a research. If the company is good, what are their fundamentals? Who is the management team? What was their earlier profits? What are the risks in that business? For example, when Paytm got listed, they had very serious risks, and it was reflected when the stock got listed. I think it got listed at a loss. Same happened with a lot of other companies. So do your research, read about the company, and then take a calculated decision if that IPO is for you or not. Okay, so that research has to be done, guys. Last, before I close the video, is how to apply for the IPO. These days it is very easy, guys. There was a time when you had to go to the broker, fill a lot of forms. These days everything is online. I'm sure the demat account which you are using, they have a feature to apply for IPOs. For example, I have a demat account with Paytm Money. I have a demat account with Zerodha. So there are options available right there. When you apply for the IPO, your money will get blocked. Let's say 15,000 is blocked for a certain period of time. When the company distributes the shares, if you get it, then you will get those shares in your demat account, else you will get the money back. It is all online. It is all online. So but you have to do your research. Don't just jump into these IPOs left, right and center, right? Because I think only 20% IPOs will make you money, but good companies will make you money. Do your research. Okay, guys, so all the best. Your investing journey is exciting. Do well, make money. I will see you in my next video. Take care. Bye.